Welcome to the Daily Fiscal Pulse for the 3rd of June, 2026, covering Wednesday's trading session. Everything you're about to hear reflects settled data, not live figures, so keep that in mind as we go through the details. Let's start with what's capturing market attention right now. There's no clear dominant narrative steering things at the moment. You're seeing headlines around Quantinuum closing flat in its Nasdaq debut following an upsized offering, and that's clearly influencing price action today. These narratives tend to shift quickly though. The actual flows tend to tell a more honest story. Turning to the fiscal data, we got a net transfer of $20.9 billion, and the real takeaway here is the acceleration in spending. Household transfers are doing the heavy lifting, coming in at $27.3 billion. Looking at ES, the picture appears more constructive than what the flows alone would suggest. ES futures ended the session at 7,572, maintaining a position above the 20-day moving average of 7,496. The 20-day trading range is roughly 287 points wide. Price is holding steady despite what looks like fiscal headwinds. Zoom out and the acceleration in flows becomes pretty evident. The 5-day average for government spending is running around $26.9 billion daily. Put that alongside the 20-day average sitting closer to $15.4 billion, and you're looking at considerably more cash flowing through households and ultimately feeding into markets. The year-over-year picture reinforces that. Spending is essentially flat at $1,107.9 billion. There's nothing in the annual data suggesting a meaningful shift in fiscal support. From a positioning angle, the fiscal backdrop isn't handing you an obvious directional edge at this moment. Our conditions gauge sits at plus 43. That's worth keeping in context. Margin debt is elevated, hitting the 100th percentile. Historically, when you see readings at that level, they function more as a caution flag than anything bullish. How does this translate to market outcomes? Even though headlines lack a clear unifying theme, the fiscal backdrop is functioning as a floor underneath things. When the government is actively injecting liquidity, negative news tends to get absorbed more readily. We're also tracking 2 straight days of increasing fiscal transfers. In our research, that pattern has historically tended to precede near-term strength in ES. It's not guaranteed, but it's a setup we monitor closely. What could shift the landscape from here? The SSA payment cycle arrives on the 10th of June, which is the second Wednesday of the month, and that typically has the ability to reshape near-term flows. The fiscal tailwind is building momentum, and the numbers suggest it has more room to run. Whether markets get ahead of that in pricing is the real question. That's where things stand heading into the next session.